All right. Hello, everyone. Happy Monday. Welcome to your weekly market check-in here with myself, Greta Wall, your host. I'm joined by Derrick Oldensmith, the head trader at T3 Trading Group and the leader of T3 Live's Pro Desk virtual trading floor. It's been a while, Derrick. My whole house got sick with a stomach bug, and then we had a holiday. So, hello. It's been a while since we've talked. Before we get into any market-related discussions, I do want to just quickly get disclosures here. These are Derrick's current positions as of our recording here today on January 26th of 2026. Again, he's the head trader at T3 Trading Group, which is a prop firm that T3 Live is linked to. All right, so Derrick, how is your Monday going so far?
It's going. It's been pretty stressful trying to be short silver today, which has just gone absolutely and utterly parabolic, and is more extended than I think any other time it's ever been in history, but has just a crazy underlying bid that refuses to break. So the metals have been a really big focus for me recently, and the semiconductors last week were a really big focus, which I still have some decent positions in. But overall, it's been good. Just been a stressful trading session trying to manage silver here.
I can imagine. The title of our stream here today is The Huge Week with Earnings and the FOMC. So we're going to talk about both of those catalysts and more here today. Let's start off with earnings because those will be first. We'll get some earnings. We got some earnings this morning. We'll get some earnings after the close tomorrow. Big day though being Wednesday with I think it's Meta, Microsoft, Tesla on Wednesday, and then Apple on Thursday. So we're getting the first batch of Mag 7 this week and then the second batch next week. So going into these reports, what are your thoughts on these names and what these reports can mean for the market?
Yeah, so it's going to be an interesting one. I feel like almost every earnings season we have this conversation as we approach Mag 7.
Yeah.
And Mag 7 are all at all-time highs going into the earnings season, and it's always a question of, are they overpricing in the potential of good news coming in? And this time it's different. A lot of these Mag 7 names, maybe with the exception of Google, are pretty decently off of their all-time highs. So the market is pricing in, I guess, not as lofty of an expectation in terms of phenomenal earnings report from these companies, which to me, that always means it's got a higher potential of actually being able to bounce up on even more of like an inline mediocre kind of report. But obviously, very much of it is going to be now based on AI capex and the perceived revenue that is coming from AI. And I feel like it was in the last earnings season that was the first time, really, with Meta and to some degree Oracle, that we really began to see companies begin to get punished on doing a ton of capex without the revenue really being there, as opposed to a Google, which is really kind of firing on all cylinders and seems to have the best plan. And you can see that in the stock chart as well.
Do you want to take a look at any of the charts ahead of these reports?
Sure. Yeah, we can pull it up.
Yeah.
All right. So like I said, Google. You can see in the chart that Google is winning on AI. They have been just taking share from Microsoft. I saw a really, really cool chart that one of my traders posted in the ProDesk virtual trading floor one point last week that just showed the AI usage over time. And it just shows that basically 85% of it is Google and OpenAI, Chat GPT. It's like 85% of AI usage. But the difference is that Gemini, which is Google, has been gobbling up a lot of OpenAI's share over time. And everybody else is just like a little bit at the top, like kind of making up, Claude and Perplexity and I guess Meta all making up a little bit at the top. So it's been a story of Google really taking share from OpenAI. The best proxy of a chart for OpenAI is Microsoft, but that's obviously not a pure play. It's just that they have a stake, and you can kind of see the weakness in Microsoft over the course of the last couple of months, though this did wake up in a pretty big way the last couple of trading sessions. and Meta snapped back a little bit as well. There have been a lot of analysts that have been coming out and defending this into the earnings report over the course of the last few days. So it's been getting a big boost. And 670 is a huge level in Meta, by the way. But you can see that last earnings report, they sold this thing down. They gapped it down huge and then sold it down for almost a full month after that. And again, that just represents how far behind they seem to be on the AI front compared to Google. But everything is off highs. NVIDIA hasn't done anything for months. Amazon, I almost think, is like second best compared to Google. It hasn't been doing anything. Apple's obviously in a little bit of a world of its own because they don't really spend on AI, but this one also hasn't been performing. So we just have a lot of these stocks looking pretty weak going into the report, and we'll see how they perform.
You mentioned it briefly, but the last Meta report was when we saw that, as you showed on the chart, that gap down based on their CapEx spending, and they were spending too much and not enough revenue to show for it on the AI space. That was the first kind of negative reaction to that. Do you expect maybe Meta's messaging around the AI spend and what they're doing to change this quarter in reaction to that?
It's going to be really interesting to see if Zuckerberg, and I don't think he's going to, does similar with what he did with the metaverse. What was that, back in 2022? I think it might have been this earnings report right here with the big gap up and then continuation that after it was kind of coming off the bottom. Maybe that was 2023. Let's zoom in on the chart here real quick.
I think it was 22. I think
so. Okay, so then maybe it was somewhere in here. But I don't remember. I thought I remember them gapping up when Zuckerberg said that they were going to get into.
Or maybe 22 was when it was starting to hurt them. And
really bad. Yeah. So this is when it was really, really bad. This gap down was really bad. And I thought that it was this gap up when Zuckerberg came out and said, like, we're all about efficiency now. We're all about efficiency. We're going to stop spending this much on Meta. And, we're starting to see a little bit of a similar picture. But the fact of the matter is it's very different. It's a different product, and there's this huge AI race. And we've heard Zuckerberg come out and say in the past that basically he'd be willing to like ruin the entire company before he loses on AI. Well, he is losing on AI. So I kind of think that the CapEx numbers from Meta are still going to be really, really high, but maybe they're trying to find efficiencies in other ways.
All right. The other news this week is that it is Fed week. The FOMC meeting sorry, got you full screen. The FOMC, the first meeting of 2026 starts tomorrow. It's a 2-day meeting. Of course, the policy decision comes out Wednesday, 2 p.m. Eastern. The big focus, of course, being on the Fed chairman, 2:30 p.m. Eastern. I think this Fed meeting a little less important than some of the previous Fed meetings. Oh my goodness. They're expected to cut rates by a quarter point. 97% of they're not expected to cut rates. That's what I meant. 97% of traders expecting no rate cut, leaving rates unchanged. Apologies for that. So rate cut would be a surprise, but not likely. So when it comes to you in this Fed meeting, with the background of the market as it is and what has been happening leading up to this, how are you thinking about this week's Fed meeting?
I think it's going to be a boring Fed meeting outside of, unless we see any language come out from Powell related to Trump, just because, this recent statement that Powell put out and the Fed put out recently, basically accusing Trump of, trying to force his hand by indicting him to cut rates because he's not willing to cut rates, got really, really dramatic recently. And it's the first time that we have ever seen, as far as I'm concerned, Powell be political. So Powell was political, and I think Trump kind of forced his hand in order to be that way. So it'll be interesting. I'm sure in the FOMC statement, there's not going to be anything in there that's specific to Trump, but I'm sure that the press is going to be peppering him with questions. And Powell is a master at kind of avoiding questions and giving neutral answers. But after that statement that he came out with recently, it's going to be an interesting one.
This meeting doesn't have any SEP, like no summary of economic projections, right?
I don't think there's going to be an update to the.
They just did that in December. Yeah.
Yeah. So and again, It's going to be a non-event as far as a rate cut. But I feel like for a few years now, 2 p.m. is boring and 2:30 p.m. is interesting. The press conference is where surprises occasionally happen. And I think that this has the same possibility. 2 p.m. we'll get some volatility. The hold rate's the same. We might see a tweet come out from Trump, blasting Powell for not cutting. And then it'll be just interesting to see what gets said in the press conference, because that could potentially be market moving.
Do you feel like the market with the past few Fed meetings, you have like you said, kind of muted reaction at 2 and then the bigger reaction at 2:30. And then I feel like by the end of the day, it's always like a blah reaction by the end of the day. You get like a lot of volatility and then things kind of just meh. And then overnight is when people really start to read through what he said and figure out what it means and stuff like that. Do you feel like that's how it's been going for the market when it comes to Fed days?
Yeah, 100%. So the day of is for the robots. The day after is for the fund managers. So the robots are going crazy, upticking and downticking the market based on every statement, parsing every word. And then the real money managers take the night to think about it. And that's why you see the day after a Fed day have a much higher probability of being a trend day than a typical day, because a lot of money managers are moving big money based on what's said on that next day. It's definitely not a 100% thing, but we'll see. There's always a higher probability of a trend day after a Fed.
All right. This is our 26th day of January. Is the third full trading week, right, of the year? Because we got that one Friday. No, this is our fourth full trading day. It's trading week of the year. My math is just not going well for me today. Anyway, fourth full trading week of the year. We're at the beginning of it. So when it comes to almost a month into 2026, what are your thoughts on the market and how January has been going?
Yeah, it's been an interesting start. The January effect of this year has been more pronounced than any other year that I remember. And you can see that with the fact that the IWM outperformed the S&P 14 straight trading sessions until finally that streak broke on Friday of last week. That's the second longest streak of the IWM outperforming the S&P, I think, in history. The last time was in 1996, I think, and it was 16. I thought we might go after the record there for a little bit. But starting late last week, we were really beginning to look for the mean reversion. The Q is picking back up, Mag 7 maybe catching a bid, and the IWM pulling back a little bit because the Russell seemed to have gotten ahead of itself. In conjunction with that, we were looking for a software bounce with semiconductors pulling back, and that trade worked out really well as well. So, this year's been all about the January effect. January is traditionally one of the most bullish months of the year. This January has not disappointed. I've been overall very bullish since December through January, but I'm getting less bullish as we're going into February. I think particularly when we get into the middle part of February, we might be setting up for a bit of a pullback.
All right. And so with where we're at in the market, let's go through some of the setups that you currently like or don't like.
Sure. So I could pull up the chart again. So the market's been interesting because it's been primarily range bound. We had some volatility a week ago with some things that Trump said, and now we have recaptured the majority of that. So this market, as long as we close up here today, is back to being full on bullish technically as far as I'm concerned. But again, as we go into February, there's some seasonality weakness there. And it's interesting that the positioning information of this market is just getting very, very full. And if you look at the Bank of America bull bear indicator, that thing has been all the way sitting on a contrarian bull now for weeks. And I've been telling my traders since I first got there that is not a timing indicator. It's something that has a very high success rate of working, but it's not a timing indicator. It could sit that way for months at a time. But I think that it's becoming notable that positioning is getting very full, that Bank of America bull bear indicator has been sitting all the way on what would be a contrarian sell for some weeks now, as we're getting into February, which I think could breed a little bit more volatility. So that's what we're looking at from a market perspective. As far as stocks go, again, starting last week, we were really beginning to look for software to get a bounce, with semiconductors to pull back. And it really started with the Intel earnings report. Intel had a massive move into the earnings report. And I was actually long Intel starting from the first trading day of January at $38. My target was only 43. I got out into 43 on January 9th here. Thought I had a pretty good trade because Intel tends to not be a massive mover. And then next thing you know, the thing, was at almost $55 going into the report. But the thing is that Intel moved higher on speculation, I think more based around China and Taiwan semiconductors than Intel itself actually being a better business. So the thesis going into the report was that Intel wasn't going to have great numbers because they're still not a great company that's firing on all cylinders. And like you and I always discuss, a big move into the earnings report means that expectations are really high. And then they sold this thing down, which also for the short term has marked the top of the semiconductors, even with like names like Micron and SanDisk. SanDisk is going to be reporting earnings this week, going completely insane to the upside. So I actually still think that the semiconductor short trade, which we were calling out last week, has a little bit more legs on it, though a lot of the meat is off the bone at this point. And my biggest concern on being short the semiconductors would be if NVIDIA wakes up. But NVIDIA is not showing any signs of waking up. It just had the opportunity to do that on Friday. On Friday, it had positive news coming out of China related to H200 sales. That should have been enough to break it out through this like $190 to $192 resistance area. But the stock failed to do that. So the consistent failure in NVIDIA and Intel earnings, and I think Micron and SanDisk getting a little bit long in the tooth, I think that these semiconductors are going to be a little bit weaker. And at the same time, we were looking for Microsoft to bounce back, and now that trade has happened as well. So those trades are kind of ongoing. I think that they could still have a little bit more legs. But then the other, just big focus right now, which I mentioned briefly, is just this metal trade. This silver move is, well, this is the definition of parabolic. The definition of a parabolic move in the stock market is the greater the price, the greater the demand. And the more that this thing has gone higher, the more people have bought it, the more it is accelerated higher. And you can just see here, this chart is moving up at a rate that is completely unsustainable. Now, that doesn't mean just blindly short the thing with your maximum buying power and take a walk. You still have to execute, because in theory, these parabolic charts, a stock can remain, or in this case, a commodity can remain irrational for longer than you can remain solvent. It's not impossible for this to do this for 3 days in a row and end up topping out at 115 or 120 on as soon as like Wednesday on just an insane up move. With that said, again, the rate of acceleration here is not something that can be sustained. The volume is maximizing. This is probably the biggest volume for SLV ever. It's only 12:50 Eastern time right now. We still have a few days left, a few hours left to the close, and we are already matching the recent highest volume day, which was a short-term peak. From an extension perspective, it's by far the most extended that it's been at any point in this up move. And the last time that silver really went crazy was back in 2011. And I finally took the time today to measure. You almost can't even see this blip here. Oh yeah, that's not the right one. Here it is. Back in 2011, the extension that silver is showing now, per the way that I measure extension on a percentage basis, is more than double the extension that it had at this previous peak in 2011, which again, isn't to say that it can't continue. Look at these up moves that this had here before it actually peaked out. But what it is to say is that it can't continue at this rate. This is going to have to give a pullback. So very focused on trying to find and communicate short-term signals to be short the name. And a short-term signal, if you capture it right and it leads to a bigger move, can really give you dividends on the P&L perspective. So every time we're getting like a little pivot high, we're getting a little bit of a signal. I've been calling out consistent trades today that are what I describe phenomenal risk reward with a very low probability of success. So I'm telling the team how to manage it. Manage the trade by getting your risk covered quickly and then stopping yourself out when a new high comes in. But once you get your risk covered, hold hold some of that silver to the short side, because if this thing begins to collapse on itself, which I think it has to do that relatively soon, though it doesn't necessarily have to be today, if this thing begins to collapse on itself, this could be back at 85 in 2 days. And if you can find a spot, and we have had call outs today where the risk on it has been 15 cents in SLV or even less in some situations, if you can actually end up nailing an execution off of 10 to 50 cents worth of risk in SLV, and you get a move back to 85 over the course of a couple of days, which I think could really happen, you're just putting yourself in the position for an incredible, phenomenal risk reward. So that's what we're looking for here at this point. With that said, consistently seeing still large institutional option flow coming in on the bull side. That makes me nervous. I hate fighting consistent bull flow because it helps to squeeze things higher. I would love to see some bear flow begin to hit on this commodity. So it's been a very difficult trade. It's been a stressful trade, but I think that traders should just be staring at this thing now, looking for the signal to come in on the 15-minute chart or on the 5-minute chart, where this thing can break an important previous pivot low or accelerate up and give a shooting star candle or something like that, where you can look to execute on the short side and try to take advantage of what could become a phenomenal risk reward.
You said you've been trying to short this thing, but it's been a frustrating day for you. Can you walk me through some of what you've been doing today and how you've been managing that trade, maybe on the chart?
Yeah, I mean, again, it's just been trying to communicate potential sell signals in the ETF. So just looking at my chart, like I think we had one in here. I can see that I shorted on the way down on this. This is a 5-minute chart that I have up right now, on the way down, right? Because I want to be shorting on the way down. So like here was one, you had an inside 5 and down, and the time of the day there, I thought it was possible to get more of a move to the 21 EMA, which would be the 8 EMA on the 15-minute chart, like a pretty similar price. And, gave a little bit of a pullback and then was disappointing, held 100 and made new highs. And then there was a similar, this little doji right in here at 11:15 was kind of another signal that I'm pretty sure I communicated, like, all right, little doji coming in, we've got a lot of extension, let's look for the short. And it was the same situation. Got a little bit of a pullback, enough of a pullback to get your risk covered on it, and then it breaks out, you stop yourself out, no harm, no foul, because you had a big enough of a move to cover your risk. If it worked, you would have gotten paid massively. Here was another potential signal here on this pullback. Didn't fully confirm because I wanted to break below, I think, 103.50 I was communicating to really confirm that this would become more like a bearish engulfing candle on the 5-minute. So never confirmed, but you could have jumped in for small risk there, probably got the risk covered, and then got stopped out. There was a couple other trades earlier in the day when things were moving very quickly that were smaller risk that didn't pull back at all and didn't even get the risk covered. But it's a numbers game, and that's what traders need to remember from a game planning perspective. It's a numbers game. If you can put on 7 trades, 2 or 3 of them are outright failures, and I don't know, like 3 or 4 of them are break-even trades or small winners, and then one of them works, you can have 6 failed trades, 1 trade work, and make a lot of money off that if you execute well and you game plan well. So, that's kind of that's what we're looking for here. Volume has been very consistently large. We haven't really gotten major acceleration to the upside. We had minor acceleration to the upside here at 12:15, which was notable, but it almost wasn't like big enough. So we need this thing to break through some pivots on the downside, or kind of give like an acceleration signal with a shooting star on the upside in order to trigger this. But this move, day 3 to the upside, up, I don't even remember, I'm not even sure what percent at this point. Up 14% right now as we're having this conversation. This extension on the daily chart, it is not sustainable from everything I've ever seen in my trading career.
All right, it's a good lesson there. That every trade isn't going to be a winner, but you just have to manage them properly, even if they're not winning. All right, Derrick, I'm going to let you get back to trading. Derrick is a real trader, so we want to let him continue doing that. If you'd like to see about working with him and T3 Trading Group, again, he is the head trader at T3 Trading Group. So if you work with them there, you work directly with Derrick on a daily basis. You go to t3live.com/DOLive for that. Derrick, have a great rest of your week. And when we talk, it'll be a new month with more Mag 7 earnings to come. So we'll talk about those next week.
Thanks, Greta.
Have a good
See you
one.
next time.